Bro, happy Monday. So I told you today I will be teaching you about PIPs, right? So first of all, I will try to calculate it with this chart. Okay. So when you are hearing about PIPs literally mean percentage in point, which mean the percentage the market is giving you and the percentage you are risking, right? So I will use this trade as for example. This was the trade I analyzed today, over trade. So there is TP. So I will use this trade as for example, right? Percentage points simply mean what you want to gain, right? This is the take profit, right? What you are targeting and what you are risking. In that pips now, what will you be looking for? You will learn how to calculate pips. So this very trade now is showing points because it is gold. Gold don't show pips directly. Gold do show points. But this about 300 something pips. While the risk is about 80 something pips. So you feel me? So when you are calculating pips, you will calculate them with the lot size. Once you are calculating pips, you are calculating it with lot size, right? Okay, let me write it. Are calculating pips with lot size, right? Okay, I will show you briefly with this my system, then I will show you some on 4 as well. So let's say for example, you all know that this is how PIP is calculated. Okay, so for example, zero point 0.01 lot size is 10 cents. 0.01 lot size is 10 cents. Cent to 0.01 lot size is 10 cents. So let's say for example now, right? For example, you are calculating, you are risking 20 pips in this trade, right? You are risking 20 pips in this trade, right? Now, those 20 pips, you want to calculate it with 0.01, right? You want to calculate it with 0.01. Now, what do you have to type on your calculator? On your calculator, you are going to type, you're going to type 0.10 times 20. You feel me? So let's calculate it together. Let me check my calculator. Okay, what did I say just now? 0.10 times 20 equals to 2. We are saying is to, let's for example, you are using 0.01 to trade. That simply means 10 cents into 20 places is $2. This 2 now is representing $2, right? 10 cents in 20 places is $2, which is pips is how long the distance the market move, right? So the pips now, like if market get to 20 pips, let's take me out, which is you are using $2 now, you are risking $2. Let's say for example now you want to say okay 0 points, you want to say 0.10 times 100. Let's for example, this is the what you are targeting, and you are targeting 100 pips and you are risking 20 pips, right? Which is $2. If you are times 100 now equals to 10, which is I'm risking $2 to gain $10. I'm risking $2 to gain $10, right? Okay. Now you are risking $2 to gain $10, right? So with that doing, you will know how to calculate your pips and know the exact lot size you have to use on a trade. So this is equals to, right, equals to this is equals to $2 just now, right? Equals to 2. So that is for the cents. That is for the cent, right? Let's say for example now you are using 0.01, you are using 0 or 0.1 lot size. Let me say you are using 0.1 lot size now, right? You are using 0.1 lot size, right? 0.1 lot size. Now how will you calculate it? How will you calculate this lot size now? You are using 0.1 lot size now. That simply mean you have to calculate 0.01 lot size now is $1, right? So 0.1 lot size is 1. Let me know. Let me see. I see it. 0.01 is $1, which simply mean once market is making one move, each move market is moving is printing $1, right? Now this 0.011 lot size now in this you are still trying to you want to calculate how much you want to risk in a trade and how much you are gaining, right? Now let me still use 20 pips. I'm risking 20 pips. In some scenario, in my price 20 pips, this trade now is like 80, yeah, because this is good. This should be like 80 pips, right? Because this 80 pips now is giving me, if I am to use 0.01, it will be giving me $8. This $8 now simplify 80 pips. Just if I'm using 0.01, right? So it's on scenario, it might not just be 20 pips, but I'm telling you, at least if you are trading currency pair, do not let it to be more than 20 pips, 20, 25, 15, because that's how you manage your risk. You feel me? So in this very trade now, right, 0.1 lot size is $1. Now you are risking 20 pips as well, right? You are risking 20 pips. Now let me go to the calculator right now. So we simply mean 1 times 20 equals to 20, right? Because you are using the pips to calculate what you want to gain. That's the reason why you need to know what is lot size, right? Now the lot size, you are using it to calculate the pips. Lot size, you are using it to calculate the pips, right? So now you are risky $20, and you are risky $20, right? And you are using 0.1. That's 0.1 now, which is 1 times 20 will give you 20. So now let's, for example, now you are targeting 100 pips or 200 pips. You are risky 20 to target 200 pips, or let me say 100 as well. 1 times 100, you see it will give you 100. That means I'm risky $20 to get $100 in this trade. You feel me? I'm risky $20 to get $100 in this trade. But in my own advice, I will not advise to be risking $20 to be getting $100 though. Depends the trade though. If it's gold, maybe, because gold pips is like very tiny, and if you want to like widen it, it must give you at least 20 SA pips and all that shit. But in a currency pair, maybe you want to target at least risk like 10 to get 100, 15 to get 100. And if you are risking 100, if you are risking 20, you can still make 100 as well. It depends the arrow though, or the analysis. So that is how to calculate pips. This is for the micro lot size, right? So now standard lot size. So let me quickly write that before I forget. Okay, 0.01 is called macro lot size. 0.01 is called micro lot size. Zero point one is called, that book I sent to you. All these things are in there. I don't know if you are reading it though. It's called mini lots y one loads and load size to infinity is called standard how to spell standard load size. So standard load size. Now what I just calculated just now is remaining the standard load size, right? The standard load size is start from 1, which is 1. Maybe if you are using load size 1, sorry, what's your circle? Let me write it here. One standard load size. One standard load size is $10. See, this is standard load. Our standard load is uncountable. You can use 100 standard load. You see, I'll be use 100 standard load size. So like that's for the big guys. You see, I'll be have over $5 million in accounts. So you can't use 100 load size when you can't use standard loss up to that extent, which is 100 load size. If you are using minimum account, you will blow it in a second. So even this standard load size now, which is this is, you have at least, you need to like have like $1,000 above in account before you can use this standard load size. It's very standard. And this one load size, because this one load size now is $10 in a movement, which is 10. Now let's say for example you are risky 20 pips in a trade, right? You are risky 20 pips in a trade, right? You are risky 20 pips in a trade. Now you will come to your calculator, and this how to the easiest way to calculate pips anyone can tell you. You come to your calculator, you are risky 20 pips in a trade, right? You come to your calculator like now, you say 10, which is the money now, which is the loss size. You already know standard loss size now, which is one loss size. That standard loss size is $10. You write 10 times 20. Now 200. Like you can see now, 10 times 20 is 200, right? Which means inside one, that is why I tell you that before using standard loss size, which is that one loss size, at least you need to have $1,000 above in account. I don't even advise to even still use it, to even use that standard loss size in $1,000 account, because you will blow it in few trade. At least mini loss size should be okay. Like if you are trading $1,000 account, you should be using like all this mini loss size, which is like 0.1, 0.2, 0.3, as the case may be. So this standard loss size now, like if you are risky 20, you are risky 20, right? You are risky 20 loss size. You are risky 20 pips. You times the 10 times 20 will give you 200. Okay. Now you are targeting 100. You still write the same 10. This to know how much you are targeting. 10 times 100. You see, that means I'm risking $200 to make $1,000. You see the calculation. Now you already know the pips I'm targeting this trade is 100 pips. I'm risking $200 to make $1,000. Now I guess it's pretty clear, right? So doing this, we know how to calculate pips easily and all of that, right? So that's the easy way to calculate pips. Let's, for example, you are able to trade gold. Now gold can literally print you 300 pips in like few minutes. Let's, for example, you are risking 20 pips, but you barely risk 20 pips in gold as well. Let's say 10 times, let me say 50 pips on a trade on gold. You are risking 50. If you are risking 50 pips and you are using standard lot size, you'll be losing $500. So, but if you are risking, if you are targeting about 300, risking 50 pips to target 300, pips or 400, $4,000. That means I'm risking $500 to make $4,000. You see how it's placed. So, but in risk management, you will not trade like this. So you can't be risking like that much in a trade unless you have the capital. Because capital is very important in the trading business. If you don't have a lot of capital, you can't trade that way. You can't be traded that way, and you just blow account. So you feel me? So in a few seconds time, you just blow your account, and so that's the reason why I told you. You will know, as a person, you know what you are risking in a trade and you know what you are calculating. So the best thing is that know the pips and know the calculation, right? So now this is how to calculate all the pips. Like I said before, 0.01 is called micro lot size, 0.1 is called mini lot size, 1 lot size to infinity, which means 1 lot size t going on from 1 lot size to go upward is called standard lot size. And how to calculate PIP, like it's like 0.01 lot size is 10 cents. Now you are times the cent with the pips, which is like this the cent. Now it's not up to $1 yet, this is cent. Now you are times cent times 20 pips equals to, it will give you $2, right? Now if you are still times this $1 times 20 pips, it will give you $20, right? You are still times this standard lot size, which is $10 times 20 pips, it will give you $200, right? So that is how to calculate PIP. But PIP do not end in just 1 lot size. There's 1 lot size, 2, 3, 4, 5, 6, 7, 8, 9. From 9 you get to mini. Let me just write that so you load that too. So these are the pips. This is for micro lot size. This is for micro. This is for micro lot size. The micro lot size is like now 0.01, 0.02 to 10, like to 9. Let me not be writing everything, I don't have that time. To 0.09. This simply means 0.1 10 cents, 0.2 20 cents, 0.3 30 cents, 0.4 40 cents, 0.5 50 cents, 0.6 60 cents, 0.7 70 cents, 0.8 80 cents, 0.9 90 cents, which is now the 100 cents. Now is there is no 100 cents again. Now that means it's starting now from $1, which is 100. Now it's now making it $1, right? Which is a mini lot size. This mini lot size now still start from, you still count it from like this, like to infinity. Like no, this is not infinity. I mean this $9. From now, you this is like from mini lot. This is 0.01. Sorry, 0.1, 0.2, 0.3 to 0.9. 0.9, yes. This simply mean 0.1 is $1, 0.2 is $2, 0.3 $3, 0.4 $4, 0.5 $5, 0.6 $6, 0.7 $7, 0.8 $8, 0.9 $9. And that $9 now will stop here now before you get to the standard lot size. The standard lot size now is now the 10, right? Which will be starting from standard, which is one lot size in the trading, which is in the broker. Now standard lot size is now, which is standard, which is starting from 10, right? Let me just write it. Standard lot size. So standard lot size now. The standard lot size now you now write one lot size now. One lot size 2 3 to infinity. This one don't get ending. Like this one just infinity. They can't have they go 300 now. Like now this the only one that have end is the micro lot size, mini lot size. But the standards don't have. You can be using 100 lot size, you can be using 200 lot size, depending on your account weight. You feel me? But that's why they call it standard. So this standard lot size now one simplified 10, one this thing, which is one lot size now is $10. Two lot size is $20, which is any move market make. As market is making that line move, is printing $20 in a move. And three standard lot size now is $30 to infinity. If you are using like Abina that is using like 1,000 100 lot size, which is one move in a trade of Abe is $1,000. So if he's moving about 70 pips, he's making 70k dollar. If he's moving about 300 pips, he's making $300k dollar, which is very like that's for the big guys though. Those guys that have those guys that have $1 million in their accounts. So just imagine you are taking a trade making 300k in a trade. I mean, your account is very high. So but for this had to calculate lot size. So this standard lot size, one standard lot size is $10. Two standard lot size is $20. Three standard lot size is $30. Four standard lot size is $40. Five standard lot size is $50. Six standard lot size is $60 to infinity. So I guess I've explained this very well for you. So in this video now, your assignment will be for you to calculate from using 0.05, targeting 200 pips, and risky 50 pips for the whole lot size. Let me write it for you. So you have to calculate calculate 300 pips, calculate 400 pips, risk, calculate and targeting targeting 400 pips, risky 60 pips in all the lot size, right? This is your homework right now. Homework, calculate targeting, calculate 400 piece target. Like I said just now, so you have to calculate target and calculate 400 pips. 400 pips, 100 piece target by risking 60 pips. So calculate 400 pips target, risky 60 pips in all lot size. This is your homework right here. Calculate 400 pips target, risking 60 pip lot size. So this video is not too long. I hope if there's any question you still do not understand, just do it the way I explain it. If you do not understand, if you have some error, I will tell you what you are missing out. Okay, so have a beautiful time. Peace and love.